Let's talk about Nvidia and their failing to disclose crypto mining revenue impact in 2018, as reported by the SEC. Without admitting or denying the charges, the chipmaker agreed to pay $5.5 million or a fine to settle the affair. The U.S. Securities and Exchange Commission said that the chip giant Nvidia failed to disclose that crypto mining was a significant contributor to its 2018 revenue. In two of Nvidia's Form 10Q for fiscal 2018, said the SEC in a press release, Nvidia reported material growth in revenue within its gaming business. However, continued the agency, Nvidia was aware but failed to disclose to investors that the boost in sales was in a significant part driven by crypto mining. Duh. Quote, Nvidia's omissions of material information about the growth of its gaming business were misleading, given that Nvidia did make statements about how other parts of the company's business were driven by a demand for crypto, creating the impression that the company's gaming business was not significantly affected by crypto mining, end quote, said the SEC. Nvidia has agreed to cease and desist order and the payment of a $5.5 million fine to settle the SEC's allegations. Looking at a present day action, Nvidia's cryptocurrency mining processors, the CMP revenue fell to $24 million in its fiscal fourth quarter ending January 30th, a 77% decline from $105 million in the previous quarter, according to its filings. Nvidia shares are down modestly on Friday morning alongside a 1.15% decline for the NASDAQ. Of course, we are aware that the stock market is kind of crashing, sort of. Is that fair? Is that fair to say? So it's hard to really extrapolate how much of an effect it is directly on Nvidia's stock share here. That being said, I want you guys to go back in time, maybe a couple weeks when we were talking about TSMC's reportings and how they've removed crypto mining from their reports to the board. And I think this is going to be something that potentially impacts TSMC as well, where they may be under scrutiny for not reporting the crypto mining for their particular, or that effect on their particular market, especially because they intentionally removed it from reports to, of course, their shareholders. And I thought that was really interesting. Now, Nvidia doing it from 2018 sort of makes sense because remember, like 2018 is when you had that quick boom up early in the year and then the bear market began. I think we're starting to see sort of the exact same reactions this time around. Obviously, why we thought TSMC was making this decision when we talked about TSMC removing it from their reports to the shareholders. This is basically going to ripple across the tech industry as something that they're gun shy of, which is the crypto industry and the effect of the super cycle that we continue to see repeated every 4 years based on the halving of Bitcoin. When I refer to the super cycle, I am specifically referring to, of course, the effect of the Bitcoin halving on the price of not just cryptocurrencies, but all cryptocurrencies and cryptocurrency related businesses, which can include, of course, chip manufacturers at any given time. So I think that obviously it's important that they report these things so that hopefully, like us as a public, can get an idea of what they're doing and what they're thinking. Like we kind of can extrapolate from the TSMC's decision here recently. I was kind of like, well, that is one of those things where it does seem to be a sign that they are at least gun shy of the crypto market in 2022, probably due to them fearing a repeat of what happened in 2018, where that market kind of goes away, or at least is significantly reduced for the time being. What can we tell right off of the bat, though, from this article? And I think what you want to pay attention to is that the revenue fell to $24 million from $105 million just on the CMP cards. We don't have a report of their RTX lineup because, you know, they like to pretend that the RTX lineup is separate from the CMP lineup as far as from with the cryptocurrency market affecting it, but I'm sure the cryptocurrency market is affecting it. But that is, you know, a 75% decrease. You know, that's only 25% of its fourth quarter earnings here. That's a 77% decline, specifically as it states here. And that should tell you what miners, at least large miners, institutional miners that are able to get access to the CMP cards, which we can't by and large get access to them. But that can tell you essentially how poorly the mining industry is growing, right? So you're talking about essentially the problem of, not the problem, we're able to interpret this data into essentially the feelings around the market in general. A lot of this is probably due to the Ethereum merge, right? So all of the miners are kind of prepping for that. They don't want to be spending more money on mining hardware. They've clearly stopped. In a majority of miners have, at least large miners that have access to the CMP cards, have stopped. Hopefully what that means is that home miners start getting access to some of these CMP cards, testing them on different algorithms, that sort of thing. I have seen some home miners start to get like 170HXs and so on. Will Nvidia continue this line through a bear market or past the merge? That will be interesting because this lineup is largely based on older architectures. Will they update to the new architectures on the Nvidia side for these crypto mining cards? Maybe not at this point because of the peak decline in it. This is also the problem that we talked about yesterday with ASIC miners in particular, and this kind of thing where ASIC miners start getting built and kind of advance during the bull runs and then come smashing back down, and you don't get a new release for new ASIC miners outside of Bitcoin until the next bull run. The L3 Plus is a perfect example of this, where you just had for the Dogecoin and Litecoin mining the L3 Plus, or the latest one was the L3 Plus Plus, which you could feasibly just flash your L3 Plus to the same performance level of. And then there was nothing there. Those hit dirt cheap prices, where we're talking about like 125 to 175 bucks a pop. And there was no real new development and no real new Litecoin or script miner, essentially, script ASIC, released until the L7 during the bull run. So you kind of get into this weird position of no progress within ASIC miners during a bear market. That's kind of disappointing and can be a significant issue, especially for projects that don't share algorithms that are close to something like SHA-256 or something that's established. What does that mean from a mining perspective, right? Or even like a coin perspective as we move forward, that will shift coins back into utilizing CPU and GPU mining when they start, because you have a little bit more play with what you can do with the algorithms and what kind of advances you can make there, and you have hardware that's available. Usually, like during a bear market, if the best thing to do if you're going to be creating a new coin or new project is to go with something that is available to everybody and not necessarily an ASIC miner. I think some of the projects that will suffer here more heavily, and I know that a lot of people will probably disagree with me, but something like Kadena, I think, because being an ASIC, because having kind of their own ASIC miners on their specific algorithm, and a downturn in the market, which will in turn basically reduce profitability on the specific ASIC miners, will then reduce the money flow that will go into developing new, more efficient miners for Kadena. And I think that that's really dangerous for a project like them. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.